Thank you so much, mate, and everyone for organising a great event. Great time in the market to be discussing strategy. So, without further ado, let's jump right on in and talk the market, because this is a very kind of special topic. It's very near and dear to my heart. We're going to dive into, essentially my absolute favorite strategy for these kind of market conditions, but any kind of market conditions for that matter, because it's all about being able to detect powerful breakouts and moves that are really quite unique, which become especially important when you're in a fragile market. Being able to differentiate between what's real and what's trap, what's a real breakout versus what's a fake out. Because there's a good old saying of going broke on breakouts. And that's it's common for a lot of people because it's hard to differentiate between the real moves that you might want to buy into versus the ones that you want to avoid or possibly sell into if you're holding. So this obviously comes at a time that's specifically important right now when it's hard to know the truth about anything. When you look at the news and you look at the streaming announcements on television and things like that, it's enough to make even experienced traders feel a bit wobbly. There's certainly been a lot of volatility. One day the market's plunging and the next day it's surging. But rather than get sucked into that, and I know how easy it is. I've been down in the States these last few weeks. I was down in Yuma for the first week and visiting some friends there, and they had the news on, Fox and CNN 24 hours a day. It was just streaming in their outdoor living area, and I just, all I could hear was $4 a gallon, and for oil, and one analyst was on TV saying, oh gosh, the market's plunging and there is no safe haven for investors, no safe haven at all. And it just made my stomach turn, because I'm kind of yelling back at him in my mind. What about inverse ETFs? What about energy? Because those are doing really well, right? So this no safe haven for investors type of emotional, language, I got a real problem with that, because there is opportunity in any market, and any and every market, for every kind of investor and trader, but we do have to be looking at it through the right lens. And so, that's what today is all about. I'm going to start out by kind of pulling back all the blah blah, all the emotional type of hype, to what is really and ultimately the only thing that matters to me, which is the data. What is the data telling us? If you'd agree, put a 1 in the chat box or the Q&A if data is what matters to you most. Right? We've been doing this for 19 years. I founded Acorn in 2007, and data has always been the source of truth that matters most to us. And that's what helped guide us away from the 08 crash, the 2020 crash, the 2022 crash, the top that we saw at the beginning of this year. It's all been certainly not a crystal ball. I don't have one. No one else does. But because of what the data has been telling us, data I'm going to share with you today. So, of course, this is for educational purposes only, not a recommendation to buy or sell any securities discussed. So do always be aware of the risks of trading and speak to a financial advisor before taking any action. And of course, while any stocks discussed today are illustrative only, they may be positions that myself, Acorn Wealth, or its employees and contractors may hold or looking to get into. So with that being said, let's dive right into it. Because this really kind of sets the tone for everything we're going to go ahead with today and dive through. And that is that really ever since November of last year, which for those of you who follow us, we've been talking about this since then. We talked about the great decoupling back in November and December and throughout the beginning of this year. That's continued. One of the things I've been saying since November last year was that we've entered into a new kind of market where the direction of the index alone has really disconnected from the truth of where the opportunities are. And that's a really important thing to kind of frame right there, right? Because direction alone doesn't explain where opportunity is, right? And think about how most people analyze the market. They start out by saying, right, are we in a bull market? Is the index up? Or are we in a bear market? When the index is down, and they look at the averages, they look at the indexes, and they react. Well, currently we're not in a bull market, and we're not in a bear market either. By the data that we've been looking at for the last 6 months or so, we are in a selection market. And what that means is that essentially, and why it can be so dangerous is because the index illusion, right, where people are just simply looking at the averages, can hide what's going on underneath, like the tip of an iceberg, right? And part of that reason, of course, is that some of the most common indexes or averages that people follow, such as the S&P 500, is distorted. It's weighted to the top 8 companies quite heavily, so much so that last year, at one point, I believe it was as much as 50% plus of the index's movement of a S&P 500 was coming from those top 8 companies, right? So when you're in a selection market, we really need to be far more selective about what we're trading, where those pockets of strength are, because again, opportunity doesn't live in averages. It lives in pockets. So I mean, if you take a think about right now, based on your strategies, everyone here in the room and we're following online, type into the chat what your strategy tells you the overall market's doing right now. Is it suggesting a boom is coming next, a bust, or not sure? Or is there a pocket that you're specifically interested in, right? Most of the time people will answer this question. I see it in rooms from 100 people to rooms of 1,000 people. It always seems to be based on where the market was going over the last few days. But what we need to be looking at is, based on the data, where might it be going next? And so how do we do that? Well, one way to start from the top down, one way is to kind of look at separating ourselves from the illusion, the index illusion, the mask, to what's underneath the surface. And let's start by looking at the ETFs, the sectors in the market, because it's really not a stock market. It's a market of individual sectors, and within those sectors, individual stocks, right? And so if we take a look from November onwards, where we started to see the decoupling of where money was going, you can really see that represented well in this chart, just as it's from an instant snapshot. So as you can see, this shows us all of the kind of sectors across the market and how they performed since November. So what's happened? Well, November, December, January, February, going up to the point where before the Iran conflict broke out, right? Take a look at what the sectors inside the market had done. Energy, even before Iran broke out, was up about 25%. Right? Energy was one of the sectors we talked about last year that had a significant amount of money flowing into it, institutionally and from insiders. We'll get to that. But so too had materials. Basic materials had done really well, up 25 to 30%. before the Iran conflict. You know, followed by consumer staples, followed by industrials. And so, you know, when you compare that to how the technology sector had done, which is the line in purple at the bottom, the technology sector by around the same point in time was down as much as 10%. So when you think of that, you could take a group of investors, and one group of investors who are heavily invested in energy and materials, they would have been looking at this market throughout the beginning of this year going, wow, bull market, booming market. My portfolio is doing fantastic. It's up 25, 30%, right? Then you talk to another group of investors who are heavily invested in tech, which was the leader of and the darlings of almost the entire rally of 2025 last year. And it would certainly feel like a bear market to them if they didn't get out when money had been rotating out of that sector late last year. Their entire portfolio could be down 10. And so that's a fairly big difference. That's a 30-35% spread that is created you know, simply by looking at the wrong area of the market and where capital was going next, right? And those people invested in energy still today and basic materials still today would still consider this a thriving, healthy market for them. And so that's my point here is that we need to stop labeling the market as one in the broad sweeping statements and rather look at where the smart money is going and where those pockets of opportunity lie. Interestingly, when you start, one of the ways that we like to do that, of course, is looking across the sectors and see where the insiders of companies in those sectors, see where they're going with their own money. Because insiders isn't a buy-sell indicator, right? Insiders, just because a CEO bought shares today doesn't mean I'm going to buy on the same day. I should say it's not a day-to-day timing indicator, but it can be very powerful in looking at where the big trends are going. Where are those pockets of opportunity going tomorrow versus where they've already been, right? Because generally when you see large amounts of insider buying, it's a forward-looking expectation, right? And can often be contradictory to where price has been going recently. It's saying, hey, I think that we're really undervalued and I'm expecting to hopefully make a lot of money. And insiders, of course, are arguably the best possible fundamental research that you can get. And it's reported to the market when they buy and sell. It's hiding in plain sight. And so when we start to look at where insiders are flowing, you can see that there are certainly pockets that jump out. And this is looking at the ratio between buyers versus sellers. How many buyers, how many sellers, what's the ratio? Don't worry about the number so much. What we're more interested in is whether it's above average or below average. Is it above average buying or below average buying? Are the buyers in control or the sellers in control? And look at that over a 1-year period and a 5-year average, short and long-term trends. And so when we see something like energy's been consistently above its averages for a while. It's starting to taper off a little bit, but that's been one of the reasons we were focused on energy last year, because that insider buying was at its peak when energy was actually going down compared to the rest of the sectors. And that told us that this is probably the area to be looking at that's coming next. You know, we're seeing the same thing right now in technology. After technology's major sell-off for the first, you know, the last 6 months, since it's recovering now, we've actually started to see insider buying step back in to the technology sector versus previously being selling months over and over. What's really interesting is that when you peel back the onion layer even further and don't just look at how many buyers and how many sellers, but also look at how many shares those buyers are buying compared to how many shares the sellers are selling. This gives you an idea of weight, right? Not just 10 buyers, 5 sellers, but what if those 10 buyers are buying 1 million shares and those sellers are only selling 100,000 shares? Well, that's a little bit more insight. So you see what we're doing here is we're just peeling back the onion layer, and what that reveals is that from a volume perspective, amount of shares bought versus sold, we're actually seeing technology under a fairly dramatic boom. 64 times the amount of shares bought versus sold as of April 29th. And we're seeing a positive read, therefore, in the overall market. We're also seeing this in real estate, consumer defensive, and healthcare. So when you combine those two, it gives us a read on what's going on. And so what that tells us is that we're not in a broad-based market where everyone's buying. But what it is telling us is that in specific stocks and specific industries, there are these pockets where there is buying going on, and those individuals are buying a lot, right? Versus everyone buying a bit, it's a few people buying a lot in specific areas. That's what the volume chart that we just showed suggests. And so once again, this tells us that, hey, we don't want to treat this as a stock market. We want to treat it as a market of individual stocks. So how do we find those opportunities that are setting up? And that's what today is all about, right? How do we actually trade it? What I've just shown you before are charts we've generated. We share these with our users every week, and we send out alerts Monday, Wednesday, Friday. We send out a video 3 times a week. On Tuesdays and Thursdays, in those in-between days, we hold live trading rooms from 4 to 5 Pacific, and we share this data and charts with our members all the time, because it's such a really valuable insight to where should we be looking next. What's likely to happen next, and from that, how do we trade it? So for that piece, let me introduce to you my absolute favorite trading strategy for capturing those diamonds in the rough, finding them and capturing the moves. So let me just show you exactly what it looks like. This is called a smart surge system, SSS, smart surge. A smart surge is very rare. When we scan for these, let's just say you can use it on the hourly, even on the 15-minute, the weekly, but let's just use the daily as an example, because that's what I scan for the most. On the daily time frame, out of the 8,000 stocks we scan every day, all stocks in the US market, we find out of 8,000, on average, about 5 to 8 per day. That's 1 in 1,000. So these are not just any old breakout. What we're looking for is something very unique. The scan is developed. It's 15 years it took for us to release this. We started Acorn in 2007. We released this in 2021, I believe it was. So almost 15 years it took us to develop a scan that could actually find this. And what we're looking for is something that looks nothing like the market. We don't want it going up when the market's up and down when the market's down. We're looking for something that's marching to the beat of its own drum. We want a stock that is singing its own song, writing its own story. In other words, something that we are so confident of that we would buy it even if we were in a bear market, because it has the essence of performing anyway. We do that with a very multi-step complex algorithm, which looks at things like volume profiles over multiple periods of time, range, a comparison against sector and market performance, and a whole bunch of other things. Spend a whole hour just talking about that. But it's looking for those diamonds in the rough. And the first part to it is the first surge. You can see how that looks here in wealth charts. It also works in TradingView and other platforms. But here in wealth charts, you can see this green box, 1, 2, 3, 4. That's stage 1. Now, we're not trying to trade that. That's it getting it on our radar. After it's on our radar, then comes stage 2. And that's the pause. It's kind of like the stock taking a breath, right? And this is where it pulls back, consolidates. And often this is where it shakes out a lot of weak hands, a lot of retail traders that think, oh, sell the pop. This is going to fizzle, because they don't know, they don't have confidence on what could happen afterwards. And while they do that, while the weak hands get shaken out, this is where smart money accumulates. Institutions, even insiders, and that is exactly what we're looking for. We're looking for the algorithmic footprints that they leave behind, that this isn't just a fizzling pop, but actually this has got all the momentum signs and smart money accumulation going on, both before and during. And then comes the trade, then comes stage 3. And this is where we get in. This is when we now know we have a really high probability set up on our hands, right? And so stage 3 is when we are then entering after that pause, as it breaks through the smart surge resistance line. That is where we'll pre-program an entry, sometimes days beforehand, to say, hey, the moment it breaks through here, buy it. The sell target is also preset. We will utilize typically at least 2 targets, target 1 and target 2. We'll preset the stop loss as well, making sure that the stop loss versus even just the most conservative target gives us a great risk reward. And target 2 offers, of course, significantly more. And what that looks like, I'll show you this in real terms. Here's a trade we did on PLX, one we shared with our members too. So let's follow along here. You can see, okay, here's stage 1, smart surge detected. So this is in TradingView, so you can see how it looks there. Same thing. We've got a big green bar which is saying, right, smart surge has been detected. It's come up on the scanner 1, 2, 3, 4, 5 times in a row. So even if you missed it one day, it was there again and again and again and again. And we can see where our smart surge breakout point is. So we're pre-programming to buy as soon as it crosses through $22.15 in this stocks example. We're presetting the first target around 240, and the second target we had was around 263. So the stop loss, the entry, target 1 and target 2 are all set up before we're even in the trade. In the case of PLX, that trade then triggered 1, 2, 3 days later. And what's interesting about that, what's really awesome about that is when it happened. This is in my Interactive Brokers account. It actually bought in the pre-market as it triggered through 215 at 7:47 a.m., about an hour and a half almost before the market even opened. Bought it at $2.15 for 4,000 shares. and then hit the first target the same day at 241 at 519 in the aftermarket. So both the entry and the exit, first exit, triggered when I was nowhere near the screen. When I was nowhere near the screen. What I love about that is that that's where your strategy is doing the heavy lifting for you, because the strategy tells us exactly when to get in, when to get out, where our targets are, where our stop loss is. I can then let the brokerage technology do the execution for me, which is often the hardest part for people, which is pulling the trigger. And so off it went, booked around $500 there, and then it continued all the way to 263, and we booked a nice, whatever it was, $1,200 profit or something, which was not bad considering the time it took to scan and program the order in. It works for bearish setups as well. I won't focus on that today, but if you are someone who shorts, here's the Bank of Brazil, also Bank of Argentina. Obviously a mega cap, so you're not going to see 60% drops as commonly when you're dealing with mega caps, but there it was, smart surge, bearish signals all over the place before it dropped from 23 to 20. That's a 15% drop if you're an options trader. Trip.com or Tripcom, another one. It's a good example here because this actually gapped down on earnings. It gapped down from 78 to 62. And typically, when you see a gap down, 99% of the time, every trading strategy would suggest don't chase. It's probably done. And 99% of the time, you might be right, probably right. But that's where smart surge are very unique, because what the smart surge is saying is that after that very powerful move, up or down, this is one of those 1 in 1,000 times where it's likely to continue. And so down it went again, another 20-ish bucks. What was unique about Trip was it was also a smart surge on the weekly as well, and that's something I really love to see when you get it happening in both scenarios. Now I've got a few to show you, a few more. I'm going to show you our most recent ones, and ones in some cases we're still in. But before I do that, let me share with you the invitation to be part of this, because this is something that moves fast. In a market that is moving faster than normal, something that has the ability to hit its first target, right, within a 3 to 5 day period, which is typically what we expect, right? Again, past performance doesn't guarantee future results, but the expectation we've had on smart surges after using it now since 2021 publicly is about 3 to 5 days to hit the first target. That means we can take partial profits. That means we can update our stop losses to above what we paid for the stock. That means we're playing now with the house's money. Right? That's the best part of a trade to be in, when you've passed the point where your stop loss is below your entry, where your original capital is still at risk from a stop loss perspective, right? And so this allows us to clear that zone as quickly as possible, and in a way where that move is meaningful. And so the invitation today covers absolutely everything you would need, starting with the Smart Surge scanner. The Smart Surge program is usually $997 per year as an annual subscription. The offer that we've put for you today is lifetime access to it. So no annual subscription for Smart Surge scanner, no monthly fee you need to pay for that. It is yours. It's yours for life, and you also get a multi-platform license. So if you change platforms in the future, or if you use multiple platforms now, you can on Wealth Charts, TradingView, Thinkorswim, Metastock, Credible Charts, TradeStation, Trading Indicators. We are also including for life our Smart Surge indicator. So not only are you able to scan for it on multiple time frames, right, but you'll also visually be able to see it on any time frame you wish, right there on the chart, from any historical indications that have happened from Smart Surge, as well as any that may be going on right now. So quite valuable if you wanted to go through and review positions you're in right now to see, hey, is there a Smart Surge going on the hourly or the daily or the weekly, where you're wondering if you should get rid of it, and maybe that might give you a little bit more insight on the real power behind the move or lack thereof. Right, that's available for life, again, on all the major platforms. On top of that, we're also including a quick start video, because the million-dollar question, of course, is, well, once I've got the scan and the indicator, how do I know when to get in and when to get out, and the targets and stop loss, right? So everything we do is rule-driven, data-driven. So in this quick start video, one video, I go through all of that, from setting up the scan to running the scan to going through the 5 or 6 setups that came up in the scan that day, and how I pick my favorite, and then the rules for entry, target 1, target 2, stop loss. All of that's covered from start to finish in just one video. So you get to look over my shoulder and go through it in a very clear way. And on top of that, there's a 1-page cheat sheet that you can print out that we give you, which has all of that right there on one page, so that you can just stick that on your wall, and every time you see a Smart Surge in the scan, you don't have to remember everything you saw in the video or all the notes you might have taken. It's right there for you, up on your wall or on your desk, making it that much easier, right? Working smarter. So we also include our Advanced Finding Flags course, which is complementary to this. You don't have to go through this to start using Smart Surge tomorrow. But we've included it because it was absolutely our most popular course for many years when we were doing these live. And it just takes you through why so many breakout strategies fail, and how we find what's really going on. And it's just a great complement to some of the things that it has in common with Smart Surge. So the value is a lot more than, of course, we could charge for it. You know, the value, including something I didn't mention, which is that you will have your own dedicated one-on-one fast-track implementation coach for 3 months. WhatsApp, screen share, phone calls, whatever you like, that can set the scan up for you, help you with the going through the quick start guide, anything you like. I just can't advise you what to buy and sell, because they're not financial advisors. It's up to you to decide that. But that's what the scan and strategy is there to guide you towards. So the value is well over $5,000, and well worth it when you think of the cost of missing a good opportunity, or the cost of taking a bad one, right? We have done offers in the past for new members, which I'm sure some of you have seen, for only $14.97. But in today's Festival of Traders event, we're including lifetime access to all of that, including 3 months of your own personal white glove onboarding for only $3.97 for everything. It is a spectacular offer. And the link is acornwealthcorp.com/Festival of Traders. And for the first 25 of you, we talked about execution being key, right? For the first 25 of you joining today, we wanted to do a first action taker bonus for the first 25 people. And that is that we'll be including 3 months of our live trading room sessions. Those are the ones I mentioned earlier that we do every Tuesday and Thursday from 4 to 5 p.m. Pacific, or 7 to 8 Eastern. So that's included. Those are recorded and sent out immediately afterwards if you can't attend live, because many of our members are overseas, in Australia, in London, UK, and things like that. So that's included. I was putting the link in the chat box for everyone. Oh, thank you. I think Dave did it for me already. All right. And on top of that, of course, 3 months access to our alerts, our Insider Smart Surge alerts, which we send out again Monday, Wednesday, and Friday, as mentioned before. and that's included for 3 months for the first 25 people joining here from the live event. So spectacular, and what I wanted to show you is just what some of those most recent setups look like. So here, with the last few minutes, take a look. So DLTH, this is from last week. I took the screenshot, but this has hit its target already. But you can see the same thing we've just gone over and over and over again. And what you might notice is that these are all stocks that are from those sectors where we've been detecting the heaviest smart money accumulation. DLTH was one. You can see the smart surge 1, 2, 3, 4, 5 days in a row. There's the stage 2 pullback, and boom, there's your entry around 310. Nice little 50-cent pop, or 20 cents, 20% close to, even just in the first 2 weeks. Sabre, which full disclosure, I do still own currently myself in the stocks. This was one where we had a first target around just around $2, just under $2, I should say. I took profit on half of my position last week as it ran into that resistance, but that was a $1.50 to $2 move, so that's about roughly 30%, and it's just currently sitting around that a next surge zone. Park Aerospace. Aerospace has been on fire recently. We've had so many smart surges in those kind of mid to large caps, especially in the aerospace area. PKE was one of them. There's your smart surge, 1, 2, 3, 4, 5, 6 days in a row. There's your breakout at $25.50, and that recently surged up to a short-term target of around 33. So again, you can use this, by the way, on small caps, mid caps, large caps, ETFs, indexes, even currency. So the choice is yours. SVCO, which I think I still own the position in. Again, downward channel, perfect technical breakout. One we shared as a signal around $5.30. That's almost doubled in price now as of today. EDSA, one of our favorite. This was a really obscure company because it was almost penny stock territory, and I don't trade penny stocks. I'm not a penny stock guy. You know, I avoid anything on the OTC and things like that. But this had just so many smart surge signals and special stuff going on multiple time frames, insider buying, and I'm a big fan of the biotech space, especially with the AI developments of it. I also like the biotech space because even if a market's crashing, if a company in the biotech space is doing something special, they could be surging away no matter what. EDSA was one of those. That's up almost 1,000% now in the last couple of months. Dare, another one of those special opportunities. LCUT, Lifetime Brands, boom, 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 5 surges in a row. I'm out of time, but I mean, these are all ones that when you log into your customer portal and check out the recent alerts and our recent trading rooms, you can check all those out. And again, if you're part of the first 25, you'll be getting 3 months access to those alerts, 3 months access to trading room, all yours. So that's me out of time, I think. So I just want to link us on the screen, acornwealthcorp.com, Festival of Traders. I just want to thank everybody so much for spending your time today, and thank you, Dave, and everyone at Festival Traders.